Your market news now. Markets in Asia ended mainly higher at close of business trade. Hong Kong's Hang Seng ended flat. Mainland China's Shanghai index gained 1.3%. Japanese shares extended gains following their U.S. peers as investors awaited testimony from Federal Reserve Chair Jerome Powell for clues on the path of interest rates. The Nikkei advanced 2% after rising as much as 2.4% to record intraday highs of 41,769.35 points. And markets in Europe are currently trading lower. Britain's FTSE 100 is slightly higher. The CAC 40 in France has fallen 0.9%, and Germany's DAX is down by 0.5%. Wall Street ended mixed as investors awaited fresh inflation data commentary from Federal Reserve Chair Jerome Powell and the start of quarterly earnings season. Traders are set to scrutinize summer consumer price data due to Thursday and producer price data expected on Friday. Investors will also closely monitor Powell's semi-annual testimony before U.S. Senate and House committees on Tuesday and Wednesday. The S&P 500 gained 0.1%, while the Nasdaq Composite rose by 0.2%. The Dow Jones Industrial Average fell 31 points to 39,344.73. Locally, the JSE is mixed at this hour. The all-share index is flat at 80,717. The Industrial 25 index has lost 0.1%. Financials have declined 0.3%. The top 10 resources index has added 0.6%, and the precious metals and mining index is 0.5% firmer. The rand is currently trading at 18.12 to the dollar, 23.21 to the pound, and 19.61 to the euro. Gold is trading at $2,361. Platinum at $1,011 per ounce, and the price of Brent crude oil is at $85.46 a barrel. Martin Smith, the portfolio manager at Anchor Capital, is our market commentator for today. Good afternoon, Martin. Thank you so much for joining us. I was so keen to hear your thoughts as we were talking a lot about load shedding versus load reduction. What's your take on this? Is this load reduction or load shedding coming back masked? What's your thinking around it?
So, I mean, we over the 100 days with regards to no load shedding, so that's obviously been very positive from an economic perspective in South Africa. The load reduction is not really about the supply of electricity. It's more about the constraints around transformers at these various plants. It's more around maintenance and just making sure nothing happens and these transformers blow, which can lead to further kind of electrical outages. So in terms of kind of power supply to South Africa, I think we're still looking relatively good, kind of given the kind of tough last 2 or 3 years we've had with regards to load shedding. Obviously, it's not the best news, but it's not kind of as bad as maybe the headline might kind of appear at first. So I think also once we're out of this winter period, I think the strain that we're putting on our grid will also kind of abate somewhat. So not the best news, but I don't think it's anything like the kind of return to the very heavy load shedding we had in recent kind of memory.
Yeah, may we certainly not return back there. Let's talk about AutoZone. They filed for business rescue. This signals that things are not only tougher for households, but for businesses as well, especially because of the kind of debt that they're currently struggling with.
Yeah, absolutely. And it's obviously a bit of a sad story given kind of the number of employees that they have.
Yeah.
But also speaks to the fact that South African companies are struggling with regards to kind of what's happening from a GDP perspective, constrained consumers, high interest rates, also very much affecting the automotive industry. And that kind of filters into all aspects of it. So I think it very much sums up just how tough it is out there and how resilient companies in South Africa have had to be over the last year or 2 or 3 to kind of get through some tough periods. But hopefully now as we head into a period of interest rate cuts, probably towards the back end of the year, and a little bit of kind of tailwinds from a GDP growth perspective, hopefully a lot of these companies can start to do a little bit better as opposed to just trying to hang on.
Yeah, let's delve into some currency news now. The rand did open quite marginally softer this morning at 18.13. Can we expect trading to remain range bound in the short term?
Yeah, I think you've hit the nail on the head there when you say range bound. I think between this kind of 1850-ish I suppose the market's still trying to digest a little bit with what's going on in South Africa, how we're looking, obviously also taking out cues from global markets as well. So I think a little bit range bound until maybe some real risk appetite returns, in which case I think you could see a stronger rand over the kind of short to medium term.
Yeah, Brent crude oil also fell to 85.60 per barrel today, particularly on concerns of supply disruption subsiding. Do you think that this could be sustained and we could see the Brent crude oil going further down, and how that would affect our petrol price here in the future?
I hope so, but I think you're right when it comes to the supply side. Kind of really starting to impact the price of Brent crude, and it's actually now maybe around supply side issues insofar as weather disruptions, so that could actually make prices a little higher. But what I think might maybe keep oil relatively the same levels in the kind of short to medium term is the fact that the market is now starting to worry about global growth concerns, and that will impact the oil price insofar as is there going to be enough demand to keep up with the kind of supply that there is? So it seems like the market's kind of changing its opinion from being worried about inflation to now being worried about global growth. So that's something just to kind of keep in the back of our minds, and that's something I think that's going to weigh a little bit on the oil price and kind of leave it around these types of level 80 to 85-ish.
Yeah, I know that next week we'll be more likely going to hear more about, oil price and the trajectory that it's likely to take when the MPC meets next weekend to announce interest rate decisions. At Anchor Capital, what has been your guys' thoughts? What do you think that rates will continue to stay put? We'll also have inflation next week because there isn't a lot of data coming out this week, but I know that next week is quite busy. What have you been saying to your customers at Anchor Capital?
Yeah, you make a good point there around how we're going from data point to data point. It's very, very important at this moment in time, and we're kind of waiting for the next thing to come along. So in regards to interest rate cuts, we don't think there'll be any decision next week. We think the first cut will come towards the back end of the year, maybe November, and we'll see 0.25% cut there, and then probably 0.5% to 75 basis points in the beginning of next year. So it's going to be a cutting cycle, but a bit of a shallow one. So I think at the moment about 0.25% towards the end of the year is what we're looking for.
We're definitely hoping for a bigger cut, but we'll see where the market takes us and what the Reserve Bank decides. So Martin Smith, always a great pleasure speaking to you. Martin is the portfolio manager at Anchor Capital, and he's been our market commentator for today.